The market is ripping higher and traders are chasing the move. But I'm not interested in chasing. I'm looking for the next setup before the crowd finds it. In this video, I'm going to show you how I approach the market using the STRADUK process, looking at trends, fundamentals, volumes, key levels and indicators. Confirmation before taking a trade is key. The goal isn't to predict every move, it is to be prepared when the right setup appears. So as I said, we're going to look for the actual setup or the next setup of a stock. Now at the moment you can see the technology sector has seen a momentum to the upside with FOMOing of retail traders. This is not something that we're interested in. We're looking for the next setup, and I do believe we've already found one. The last video we posted was based on ARTW, TUYA, and recently HUYA. HUYA is a stock ready for setup and trading for the long, and you can clearly see key levels of interest 3.4, 3.24, 3.43 and 3.61, at which point we'd be willing to take profit. However, today we're going to be discussing a brand new stock that has flagged up on the system. INVE. On the screen at the moment you can clearly see the levels that we've marked off of interest at this price: 2.44, 2.63 and $2.80. With current take profit levels $3.80 and $4. Now if we look at the monthly chart, what we notice is there was a downside sell-off and then it met a good strong support area at price, which is now in a accumulation zone. Current indicators RSI and MACD show at this moment in time near oversold and trading below the zero histogram. That tells us the stock was in a downtrend, but because the momentum has now slowed and stalled and the indicators are holding these levels, there is a battle between buyers and sellers. Now the battle at this moment in time to you guys may look like nothing, but to us the buyers are in control. The buyers are protecting a certain level. Volume has been decreasing over the past month. We're going to go over to the weeklies and we're going to see how these indicators react to the current order flow over the past 3 months. Okay, now what we noticed on the indicator of the RSI became overbought in June. It rose above early July, showing momentum to the upside. Very small profit if you wanted to, roughly 10-20% profit. However, the stock is still in accumulation and is now ready to break out to the upside towards $3.80. Looking at the RSI, your current faster moving RSI setting of 6 over 13 has now begun to magnetize towards the slower moving RSI, which is currently 13 weeks, 6 weeks, 13 weeks, 6 weeks. This tells me, with the fact that the volume is low and the RSI had plateaued and is now beginning to magnetize and retest to break above the slower moving RSI, we have seen an accumulation of shares in this price area with the greatest interest at this moment in time between $2.44 and roughly $2.80. Now The MACD, on the other hand, the 6-week MACD, comprising of a convergence divergence including 13-week inside this with a 13-week signal line. What we're seeing is a accumulation of shares protecting this buy zone. And then the buying side of the trades, the order flow is now becoming a lot more aggressive. And as we can clearly see, both RSI and MACD are now testing those slower moving signal lines. The moment that this is crossing over, as well as the RSI, we will then begin to see the momentum kicking in, and the buyers have then won the battle, and the price will begin to retest this prior resistance level. The reason I don't use moving averages, volume weighted average price, or anything on my charts, because I want to see them clean and clear. The only thing that would invalidate this setup is if momentum and volume is still low. So what I'm going to do now, I'm going to quickly go over to the actual setup that we use to identify early momentum swings to the upside. Just briefly, on the screen at the moment, what you can see is a sort of heat map. Okay, it is a list of businesses that have key targets to hit and maintain. So for example, we're looking at INVE, which is here, row 18. INVE has total tangible assets of 18 times more than free cash flow. And the reason this is important is because the free cash flow for INVE is negative. There is no yield return on INVE. And for that, we want to know how much of the tangible assets, or how long of the tangible assets can absorb this negative free cash flow. Okay, so INVE at the moment is in a transitional phase because it's negative free cash flow. It does not mean that the company is going into liquidation. What it means is it's in a transition period, and the fact that it's got 18 times tangible assets coverage of the free cash flow means it's got 18 years worth of coverage before the stock really gets into trouble. 2, it's got 14 times its tangible assets over its liabilities on the balance sheet. So again, 14 years worth of coverage of its current liabilities, meaning not only does it have 18 years of coverage of negative free cash flow to stay afloat, it's got 14 years worth of assets to cover its long-term liabilities, you name it, loans, anything that is a liability. INVE has coverage. So what this says to us, the stock is low risk, so it's still a tradable stock. The current price at this moment in time is below or equal to its 52-week low. The current price to tangible assets, the ratio itself, is trading below or equal to 10% of the 52-week low price to tangible book value. That tells us that the price in relation to its assets at this moment in time is trading at a discount. I'm going to briefly show you what we mean by this. Here is the current price to book tangible assets. Okay, let me zoom in and let me find row 18. So currently trading at a 60% discount to the tangible book value, and also near its 52-week low price to tangible book value. it's trading nearly, or actually it's trading more than 50% away from its 52-week high. 52-week high $5.30, current price $2.65, 52-week low price $2.42. This is a perfect setup at this moment in time for a long. Okay. Now, if you look at the actual price of IMVE, IMVE currently priced $2.65 with a tangible book value price of $9.65 and a forward forecasted price of $10.62. That's a 72% and a 74% discount away from these prices at this present time. They are not, as we call, target prices, okay, because stock is always changing. But what we can say, it's trading at its low, it's trading at a discount, and it's in a key area of interest. If we go back to the chart, we can clearly see that we are in a very aggressive accumulation zone. STRADUK finds the setup before the crowd does. Would you take this setup? Subscribe for more trading setups, market breakdowns, technical analysis and trader focused content.